Hey, good afternoon, everybody. Hope you can see me. Hope you can hear me. If you can let us know. That would be a good start as always. And welcome one and all to our what is now Admirals. We are changing from today from Admiral Markets to Admirals. You'll see lots of fantastic marketing information on our website. You may have even received an email from it, but as from today, we will be Admirals, and you will see all of our branding change over the next, over the next 48 hours or so. But it's very welcome for you to be here with us. Really looking forward to today's session. If you're joining us here, live in the session, or if you're watching this later on demand on the Admiral Markets YouTube channel, then be sure to give us a like. If you've got any questions or comments, then please drop us in there. Okay, we're always fascinated to get the feedback. If you have particular thoughts about what you'd like us to see us deliver in future sessions, then fantastic, put it in there. We're always really happy to get that kind of feedback, and we want to provide webinars that are of fantastic value. But as I said, great to see you here joining us today. We've got an interesting session on day trading patterns, which will come up in a moment. Thank you, Claudia, Vilma, Ed. Okay, thanks, Ronald. Great to have you all here. Thanks for letting me know that you can at least hear me and see me. That's always a good start. We appreciate that. When we're using tech like this, there can be sometimes a few gremlins, but that's a great, good start. And of course here, on behalf of Admirals, is that we appreciate that it's been a rather eventful 12 months for us all, and wherever in the world that you're joining us from, we hope that you're safe. We hope that you and your families are well, and we appreciate you coming to join us, and we look forward to providing these fantastic webinars to help you with your own trading journey. We love to hear about your own particular successes and challenges, because everybody has them. So by all means, if you've got particular thoughts or ideas, or particular experiences you want to share, then invariably please put them up in the chat box, and we'll be very, very happy to sort of help share those with you. So with that, out further ado, what we're going to do is I'm just going to bring up our slides, and we can start with today's session. I'll just move that across there. Just bear with us 1 second. Hey there, Yomi. Great to hear. Super to have you there, Claudia. That's fantastic. We'll just bear with us 1 moment, and we'll do that. Great to hear, Claudia. I know you've been here quite a few times. Yomi, Ronald, it's all fantastic. Absolutely. Jacek, it's great to have you here as well. You're all very, very welcome to spending this, if you're joining us here live, Friday afternoons here. That would be, that's great for you to sort of to be here with us. I just need my my assistants to make me the host, and then what we can do is we can share our screens, and we can start to have start to sort of cut through the main part of our session today. Super. So I hope you can all see my slides. Hello, Thomas. Great to have you here. Great to see so many of you here today. Stuff we're really enjoyed here. And yeah, as I said, we're here today to talk about day trading patterns. Okay. And we'll talk about, are there particular patterns that we can use in our trading to help provide us a little bit of an edge when we're coming to day trade markets. Now, it'd be fantastic to hear, what, if any, experience you have of trading using day trading patterns here. I always appreciate we've got a real wide range of experience of people who join us, from absolute beginners to people who've been trading for many years, and it's fantastic to have you all here. You're very welcome. And if you've got particular day trading patterns that you particularly like, or if you had experience with, please just put it in the chat box. It's great to be able to hear what others' experiences are, and I'll be very happy to share that with all of us here today. And as always, today is the last day you'll hear from us as Admiral Markets, because we are now going forward going to be Admirals, okay? But what we have to realize is that it's still the same fantastic broker that provides a global presence with support in local languages. It is licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and providing you the opportunity to engage with many markets using both the MT4 and MT5 platform and also the Admirals Supreme Edition. If you've got any questions about Admirals, well then please by all means get in touch with your account representative and they'll be very happy to help guide you. So what are we going to talk about today when we're talking about day trading patterns? Well, not unsurprisingly, I'm going to talk about, are there certain patterns that can help us with day trading? If there are, well, then what should we focus on? Are there particular ones that we particularly like? And how can we use them in our own trading? And if we have enough time, what we'll do is we'll switch across to the live charts. I appreciate that always helps. So by all means, stay with us till the end so we can actually have a look at some kind of live examples as we go through the end of our session. So for those who don't know me, my name is Paul. I've been trading for many years there, okay, and I've transitioned through to trading for hedge funds. I've traded for high net worth clients. My primary focus on trading FX indices and commodities. That's where I'd suggest I have my best experience. And for kind of longer term trading, I am a sort of just a trend following trader. And for intraday day trading, okay, I'm more focused on sort of reversal and mean reversion trading, which actually will come to the fore later as we talk about it in a few moments' time. So, day trading patterns. As I said, it's great to hear. It's great to hear if you have any particular sort of experiences of that. Georgie, okay, hello from Sweden, says, "Yep, you're great." As I said, it's fantastic to see people from all over the globe joining us for these sessions. Okay, you're very welcome. It's great to have here. My host says that they like my new cool picture. Okay, well that's great. Everybody's happy. It's a good start. But shall we talk about day trading patterns here, ladies and gentlemen? So, not unsurprisingly, intraday trading is a very popular endeavor. Okay, some people it might be a pastime, for others it might actually be their main particular job. As I said, we have a vast range of people joining us here. But when it comes to any kind of trading, and in particular, okay, when you're engaged in sort of intraday trading, is that it's important to have and know your edge when you're intraday trading. That edge can actually come from various sort of formats, from various kind of angles. For some people, their edge might be just trading one particular simple pattern day in, day out, okay? And that might be their statistical edge. Other traders, more like myself, where actually my edge is, I think, more about my behavioral edge, okay? It's the ability to sort of, be patient. It's the ability to effectively to really do nothing when there's nothing to do, is to actually to do nothing and actually not to fall into sort of into kind of impulsive knee-jerk reactions, just chasing trades, chasing money, okay? So it is, you can have, your edge can actually come from several areas, okay? But the important thing is to know that you do have an edge, okay, and to know what it is. One of those edges can be utilizing simple day trading patterns. And there's a range of those. And that's what we're going to take a look at today. And what I'm going to do is, as I said, there's actually lots and lots of day trading patterns. But what I'm going to do is I'm going to share a few that I particularly like, I particularly use, that also, for yourself, regardless of your trading experience, that you'd be able to sort of see and recognize and start to employ within your own particular trading from tomorrow. Because that's actually the sort of what the aim is for all of these particular sessions, these webinars that we deliver along with my colleagues Jens and Marcus, is that we're going to provide educational content that is of great value and use to you, that you can actually use tomorrow, okay, or in Monday, okay, in your next week, at the start of your next trading session. That's what we're trying to do here and share with you during these kind of during these Admirals webinars. But let's have a look at first things first. All right, first things first. Okay, sometimes it's important as a trader to ask yourself a few questions to get yourself ready for the session ahead. Okay, and that can be both technical ones, but also individual ones. And we've touched on some of those in particular previous sessions where we've focused on some of the elements of trading psychology. One of the things that, when you're intraday trading, and that could be, you could be intraday trading let's call it the kind of the London European session. Maybe it's the New York US session. Perhaps you're trading the kind of, for me would be the overnight Asian session. One of the things you really want to be able to work out very quickly on an intraday basis is this session, is it trending or is it consolidating? Okay. Is the market moving in a nice trend or is the market range bound? Now that, I will admit, is sometimes, it's easier to say than to do, but, with a little bit of experience, and we're going to look at charts in a moment, it becomes clear and easier to sort of identify as quick as you can whether that particular session is likely to be a trending one or a consolidating one. It might also help to understand, well, what actual phase is the market in. I'm going to talk about that in a slide or two. Generally, what I found from my personal experience is that on an intraday basis, 70 to 80% of the time, markets tend to be range bound, okay? They may not actually close too far away from where they actually opened. There might actually be lots of movement during the day, during the session, but actually where it opens and where it closes may not actually be that different. And so what that gives us is that gives us a bit of a range bound market for about 70 to 80% of the time. And that's kind of useful information to know. It's useful information to take on board because that can help you with, as I say, trying to identify what kind of session we're likely to be in, whether it be a trending one or whether it be a range bound consolidating one. As the slide says there, the faster you can identify what type of day it is, the more effective you'll be. Because what we want to do is, we want to work out, is this market, is it trending or is it range bound? So that means then we can focus on, well, what kind of trading methods should we employ? Not surprisingly, if the market is a trending day, well, then we might want to employ trend following methods. However, if the market is range bound, well, then it might be looking at mean reversion or reversal style trading. If you want to sort of learn more about that, I sort of, definitely sort of encourage you to go back in and look at the Trading Spotlight webinar archive, which you'll find on YouTube, and you'll find, there is an absolute wealth of information on there, but also myself and a couple from my colleagues, we have done a couple of sessions on things like, reversal trading, okay, understanding, intraday price action trading, etc. And you'll find them there, and my assistant will at some point during the session kindly maybe put up a pointer to one or two of those. But you'll find that there's fantastic information in that webinar archive, and I absolutely sort of recommend and encourage you to go on and pick up on that. So when I'm talking about phases of markets, there are kind of two phases, all right, or two parts rather. I apologize, and I'm all for keeping it as simple as possible. All right, human beings. And men in particular, and I include myself in this, is that sometimes we try and overcomplicate things, okay? We think, oh, it can't be this simple. I need to complicate. It needs to be harder. It needs to be harder. And actually, it doesn't. When it comes to trading, especially intraday trading, when things are happening fast, okay, and it can be dynamic and it can be fluid and things change rapidly, it can help enormously to keep things very, very simple. And with that can be the phase of the market. And we can have two parts to that. Now, the first phase should actually be pretty, quite relatively easy to identify. Is that market in a downtrend? You'll hear me talking about this all the time, okay? A good trend will leap off the chart at you, okay? That market is uptrending, okay? The one on the far left is downtrend. They leap off the chart at you, okay? The challenge is remember what I said a couple of slides back, is that, 70 to 80% of the time, the market can actually be like this, okay? It can be sideways, it can be range bound. And if you're employing a trend following method when the market is sideways, range bound, or just consolidating, well, it doesn't really matter how good your trend following method is, you're still going to struggle, okay? So as I said, being able to identify what kind of phase is this market in, okay, that can help you the quicker you can do. Sometimes that will be very easy, other times that will be challenging. And my experience, okay, my guidance would be that if you're struggling to identify it, if you're a new trader, well, then my actual is take a step back, okay? Take a step back. It could be that session is very, very choppy, and what you might have to do is come back with, for the American session or the next session on wherever you're based geographically. But if we can start with identifying the phases of the market, starts to give us, just a bit of a quicker, better way to understand what we're actually looking for. There are also two other sort of kind of phases of the market, which, you know, I kind of like to consider and bring it into my understanding. The first one is where we see a transition. Okay, we're transitioning from a downtrend to an uptrend. Now, you know, very often, and we can see here, you know, this basically, you know, it kind of having been down, it actually goes into a little bit of a sideways. It pulls up, it comes back for its last test before it goes on again. Sometimes these transitions can be quite, I'm going to say the word pretty, because actually as someone who looks at charts all day, sometimes it is lovely to see a pretty chart. Equally, sometimes those transitions can be quite scruffy, okay, because they're changing. Think of it like you know, an oil super tanker trying to turn, okay. You know, it doesn't happen fast, okay. It rarely happens fast. It can actually sort of take a bit of time, all right, and it can be slow and it can churn up the water, and markets can be a little bit like that. Equally, you can have a transition from an uptrend to a downtrend, and hopefully you can see here, you know, we've had a transitioning here, okay, we've had a high there, and then we're starting to get lower highs, okay, lower lows, because the market is transitioning, okay, it's been into an uptrend, and it's going through a period of transition before it extends into a downtrend. So, you know, I would look at that kind of like, you know, 5 phases, 5 simple phases, and if you can use them to help identify what kind of market environment you're in, that puts you in a place to start to identify and help with understanding, you know, what kind of phase you're in and what kind of tactics should you actually help with. Claudia is asking, you know, is it possible that, you know, your markets might be sideways during months? Well, if you're looking at a bigger picture, Claudia, if you're looking at like daily charts, weekly charts, monthly charts, absolutely, it is quite possible that market might be sideways for months. But what we're focusing on here today is more about, you know, sort of day trading, shorter term trading, intraday trading, where markets might be sideways for a session, a day, maybe a week, maybe even 2 weeks, but generally, okay, all right, on an intraday basis, you know, you normally have at least one trending day a week, okay? And you'd have at least one trending day. Sometimes 2, it depends upon what bigger phase the market might be in. But as a general rule, you'll always have at least 1, maybe 2 trending days, okay, during the week. And as I said, having the ability to identify that as quickly as possible is something that can help you enormously as a trader. So as always, you know, I like to put up these 2 slides when we're talking about intraday trading markets. Okay, you know, I put up these 2 slides because, you know, I always constantly want to reinforce good messages about what good traders are doing. Okay, and if it's important to have a price action trading plan, it should be simple and clear, especially when intraday trading markets. And as I say, you know, there are you know, previous webinars that talk about, you know, how to advance your intraday FX trading. Okay, you'll find those in the Admiral Markets YouTube webinar archive. You'll find them full of it. So please, you know, by all means, you know, sort of make use of those fantastic resources. But, you know, I always say it's good to have a routine, okay? And with intraday trading especially. So even though you might be intraday trading in shorter timeframes, I still tell people, you know, start by identifying significant levels on monthly, weekly, and daily charts, because you don't want to be buying into resistance. You don't want to be selling into support. You're looking for good price action triggers, which we're going to talk about in a couple of slides. Make sure that, you know, when you're entering the trade, be sure to wait for a break of the candle. Don't get too overexcited, okay, and start entering trades too early. Make sure there's always a stop loss, okay, and it's usually on the other side of the candle or the pattern. Should be risking more than like 1% of your risk per trade, and you're also looking for, hopefully, you know, asymmetric reward to risk ratio. So if possible, 2 to 1, maybe, you know, more, depending upon how volatile that particular instrument is. And as always, record your trades, review them, and then repeat the good ones. And like any good business, that's what you're just looking to try and do. And it's also important to have that discipline, okay? And that discipline comes for your risk management. It's absolutely key. Always honor it, okay? If you're going to do intraday trading, know what news is coming out for that session. You know, the Admiral Markets, you know, website provides fantastic tools for news. You can do that on admiralmarkets.com with /analytics. There's one page with fantastic details in there. You'll also find a whole host of other resources on the Admiral Markets website. So you have no excuse not to know when the news is coming out for that particular session. If possible, conduct your analysis before you sit down and trade, because, you know, once markets start moving fast, it can be sometimes a bit challenging. Resist the temptation to trade out of your main session. What does that mean? Well, if you're going to trade euro sterling, okay, you're better to trade euro sterling during the early morning London FX session, when both the majority of European traders and sterling traders will be active. Trying to trade the euro sterling at, let's say, 11 o'clock in the evening UK time on an intraday basis, when most of the European and sterling traders are either at home or in bed, is generally sort of not, it's a bit of a pointless endeavor. As always, it might sound simple, but make sure you have a good internet connection with a backup, because, as always, the internet drops at always at the worst possible time. And it might sound simple, but make sure you're rested and prepared for any trading session, okay? And the more you trade, the larger position sizes grow, the more that this becomes important for you. So, whenever we're engaging in that, we talk about those, okay? So it's a case of, it's just to reinforce good practice. That's what we want, reinforce good practice. Yomi says is 1 to 2% of equity or balance. Okay, so you'd be looking at like 1 to 2% of your balance. Okay, that's what you'd be looking at, depending upon the size of that within your particular trading account. So when we're looking at day trading patterns, as I said, there are actually dozens and dozens of them, but today I'm just going to narrow it down to focus on two formats, namely price action candlesticks and price action chart patterns. They are different. We're going to look at them and we'll discuss them now. Maybe you might actually use different ones. As I said at the start, if there's particular ones you like, or there's particular ones you use, or there's ones you're interested in, put them in the chat box. Okay, maybe we can have a look at them if the time. We'll take that on board. But definitely, just for within the confines of today's session, okay, price action candlesticks, price action chart patterns. So let's have a look at price action candlesticks. And I'm not going to go into them in too much depth today. As I said, you'll find fantastic material on the YouTube webinar archive that goes specifically into these particular price action candlesticks. But I think if you're going to intraday trade, you should be very well aware of them. You should be very comfortable and you should understand them. Okay, so practice them. There's no real excuse not to. Now I'm just going to bring up my drawing tool here. It always helps us, doesn't it? So price action candlesticks. Okay, you have to remember that by their nature, candlesticks are a reversal pattern. Just bear that in mind. People forget that sometimes. Okay, but it is by its nature a reversal pattern. So we have very popular candlesticks. Okay, so you'll hear things like rejection candles, pin bars, hammer, shooting stars. I'm not entirely too fussed about how you label. It's more about you understanding the psychology of it. So that would be these kind of candlesticks here, where in this particular case, price goes up, it provides this, what is a shooting star, before price drops away. Or alternatively, price is coming down and then it prints a hammer before price reverses and moves the other way. As I said, there are actually specific webinars in there talking about that. So please, by all means, make sure you can actually access them and use them. You might have, engulfing candles. Well, if price is coming up, well, this is what we see: a bearish engulfing candle that completely engulfs the candle beforehand. Alternatively, price might have been coming down when in fact we get a bullish engulfing candle. Okay, and the price completely engulfs the candle before it reverses and heads on up. And that is effectively, an engulfing candle. One of my own favorites are key reversal candles, where in this particular case, we can see price has been trending up. Price during that session, it pushes to a new high, but it rolls over, collapses, and actually closes beneath the low of the previous candle before price makes its way down. Okay. Good psychological, you're understanding the psychology of what's actually gone on, what has had to occur for that price, that candlestick to be created. Or alternatively, where price is coming down and then effectively in that session, price pushes to a new low, but price turns around and it closes up on its highs and it closes higher than the previous candle's high before price raises its way up there for the next few candles and sessions, because there's been a complete psychological shift there. Okay, in that particular case, the bears were in control at the start of that candle, but the bulls have stepped in and wrestled control, and now they're driving price upwards. And then finally, you've got morning and evening stars. Okay, so a morning star is normally price is coming down. We get it's a three candle sort of pattern. Namely, we see one bearish candle, a middle candle, which is normally a smaller candle. It might be in this case a rejection candle. It might be a little doji, and then following a very strong bullish candle before price takes off to the north. And that would be a morning star, because it's expecting, like, as the sun rises, that's what we're expecting, price to actually rise. Or alternatively, an evening star where price has actually been in an uptrend. We get the first candle is, it's a strong bullish candle. The second candle is a smaller candle, which might be something like a hanging man or a shooting star or a doji. And then followed by, the third candle, which is a completely strong turnaround bearish candle. And we're expecting that price to actually sort of drift its way down there. And that's an evening star, because actually we're expecting price to drop a little bit, like in the evening when the sun actually, goes beyond the horizon. So Peter's asked, what time frame do you favor when day trading? I personally, Peter, good question. I will look across the kind of the 1 minute, the 5 minute, 15 and the 30 minute. And what I'm going to show today is lots of examples from different time frames to show that. Okay, what I'm sharing with you here is, as always, what I like to think of as time frame and instrument agnostic. So you can use this information for your intraday trading, whether you trade 1 minute, 5 minute, 15 minutes, okay, 30 minutes, and also you can use it regardless whether you're trading FX or whether you're trading indices or whether you're trading commodities. Okay, so that's always the kind of way we're going about in terms of the information I'm trying to share with you, that you can use it regardless of what your particular favorite trading methods or timeframes or instance may be. So a couple of quick examples here. Okay, so this is a shooting star, and as you can see, it is on the FTSE 30 minutes. And what we're looking for here is this little grey box is something that tells me that there's an overnight session. I have mostly a 20 period moving average, which is blue, a red 50 period moving average, and a green 200 period moving average. And what we're interested here is that actually, let me just draw this about, is that actually what we have here is this is a rejection candle. Okay, there's a shooting star after the price has broken out. Okay, what we can see is that the price hit the previous week's high. Okay, so we're getting a confluence of events. We've had a little bit of a move up. We've had a shooting star formation at previous week's high, and what happened was actually later was that effectively the price reversed and it fell away. Okay, this had been a market that transitioned. It transitioned from an uptrend into a downtrend. Okay, and what helped us with that is seeing that kind of that shooting star at the previous week's high. Remember, candlestick pattern is primarily a reversal pattern in itself. So it needs to have something to reverse. It's always worth remembering that. Sometimes people forget that. It's all about the context of what we see. And here's on the flip side. This is a series of hammers. Now we're actually looking at the pound against dollar on the 5 minute chart, and you can probably see that price has been in an uptrend, but it comes back to, this is the red 50 period moving average. And what we see here is this is a hammer. Okay, not only is it a hammer, it also is a bullish engulfing candle, and it's also a key reversal candle. So there's a couple of things happening there before price actually extends its way up. It comes back and then it prints another one here, and in fact there's another couple there of basically hammers, bullish hammers. Okay, in a pullback in an uptrend before price rallied its way up. Okay, and hopefully you can see that on that 5 minute chart that price, that day was, it was a trending day. Okay, and as I said, sometimes good trends will leap off the chart at you. Okay, other days, it might take a bit of time for that, because price might need to make its move, and there will be days where it's actually very difficult to work out whether it's a trending day or a range bound day. My normal suggestion is if you're struggling with that, then just step aside. Okay, wait for the next session. Don't try to fight the market. Okay, I mean, you're welcome to fight the market, but there'll only be one winner, and it's unlikely to be you. All right, so take it from years of experience. Good trends will leap off the chart at you. Okay, and that is where you want to actually trend them, right? And remember, as I said, you might get 1 to 2 days a week where you might get a nice sort of trending day like that. What we have here is there's a bit of a common, and I've put in that this is a bit of a scruffy chart, because that sometimes that's what it's like, and and it's about you being able to identify simple patterns that would work for you. And this is the euro against the sterling, and this is a 15 minute chart. And after price has broken out of its kind of Asian session, price kind of was in a very scratchy move down until actually what we saw here was we've got a combo here. So what we had here is this is it's a bullish hammer. And then a couple of candles later, what we actually get is also a bullish engulfing key reversal candle. So we've had a move down followed by a combo, and then actually price raises its way up until actually it starts to print a shooting star at the 200 period moving average. So, as I said, you'll see there's a combo there, and there's nothing wrong in that. Okay, and sometimes that actually is even better when you see a combo of a couple of different price action candlesticks, which are all confirming what you're looking to do. In this case, it was a scratchy day, price overextended, and then we expected a mean reversion, price to pull back. Okay, and that's when you see price action combos like that. That is when we start to get a little bit interested, and that provides us with a trading opportunity. And this is this will be a bearish engulfing candle, okay, and here we have this is the pound against the Japanese yen on a 30-minute chart from will be about a week or two ago, and price is actually the previous day we can see actually price was in a trending day until it made what's here as a double top. And then during the Asian session, we had it came up to there again, and it came up to there again, and then actually what we printed here was having hit the previous day's high there. Excuse me. We then printed a kind of a bearish engulfing candle. It was also a key reversal candle as well at the very start. Okay, and it's the start of the European session, giving us an indication that we've hit a high here. We've hit it once, twice, okay, 3 times, 4 times, 5 times, 6 times. Can't get above that level, okay, for whatever reason. That kind of 144.90 level, it's not happening. So if it can't break above it, well, where's it going to go? It's likely to go the opposite way, and that's actually what it did, okay, and that's where it drifted away from. So hopefully there's just a few different examples there, different time frames, different instruments, just to show that with a bit of experience, a bit of practice, you start to sort of utilize those kind of candlesticks to give you an idea of some opportunities in how you actually look to engage with markets on a sort of shorter time frame. The next sort of element I sort of said, first we've looked at candlestick patterns. The next is actually price action reversal patterns. Okay, so those candlesticks could form part of a much bigger chart pattern, right? And there are actually quite a few of them. There are actually quite a few of them, but today I'm just going to focus on 2 that I particularly like and I use myself, namely double tops and bottoms and head and shoulders and inverse head and shoulders. Okay, as I said, there are quite a good few of them, but we are constrained by time, ladies and gentlemen. So I just want to focus, as I said, on the ones that I particularly like and use myself, because I'm able to sort of show them to you and explain them to you in a better way. And let's have a look. And some of you might actually be, aware of double tops and double bottoms. Once again, if you go in and look at the Admiral Markets YouTube webinar archive, you will find they'll find these webinars there on basically, as I said, how to advance your intraday FX trading, how price action trading plans, and you'll find lots of elements in there in more detail, so you can actually, sort of gain more information, education, knowledge. Today, I'm just going to show you how these patterns can help you and how they play out and work within particular markets. Double tops, listen, as the name implies, okay, as I said, keep it simple. You get a first top, a second top, and that's enough. Okay, the market runs out of energy and it rolls over, and invariably once you can see a very clear neckline, that gives you an opportunity to basically have your entry with a stop somewhere up there, or maybe even above the top, depending upon the size of it, with looking for price to actually drop. Not unsurprisingly, a double bottom is, as you can see, it looks just like a W pattern there, doesn't it? Okay, it just looks like a W. And once we have identified where our neckline is for new traders, well, you're able to sort of buy on the other side of that, stop somewhere down, what we'd call like the second leg, with the target on the rise upwards. Okay, so we're expecting double tops for price, at the top of trends, for price to roll over and fall. We're expecting double bottoms after price descends, okay, and price to reverse. Remember, this is it's an example of price transitioning from a downtrend, transitioning through to an uptrend. And head and shoulders can do that as well. Head and shoulders are quite a simple, pattern. It's very clear to see. Not surprisingly, head and shoulders, you get, you get a left shoulder, you get a head, and you get a right shoulder. Now, if you look under, classical technical analysts would have that the right shoulder should be lower than the left shoulder. I wish it always worked out like that. It doesn't. Okay, markets have ways of printing and messing with you. Okay, all right. That's just the nature of trading markets. So if you're seeing a right shoulder that's lower than left shoulder, that's very nice. But don't go there expecting to see that every single time, okay? And what you can see is, it's identifying where that neckline is, and standard sort of trading theory would be, trading a break of the neckline with your stop somewhere up on the long or over the right shoulder. And for an inverse head and shoulder, as the name implies, okay, all right, as the name implies, price has been coming down. It then prints a left shoulder, followed by a head, followed by a right shoulder before price rises. Once again, this is a transition, isn't it? It's a transition phase from being in a downtrend, and it's now transitioning to an uptrend. And once we identify the neckline, we can buy the break of the other side of it, looking for price to rise with our stop somewhere down on that kind of right shoulder leg. So two sets of quite simple patterns, but they repeat themselves, and the quicker you become at being able to identify them within the kind of context of what the market is actually doing, well, then that gives you an opportunity to start to sort of focus in on what you should be looking to how you should be looking to trade and engage with them. So this is, I said, I've tried to use all sorts of different examples from different instruments at different time frames. This was the FTSE on, I think it's from Monday early this week. This is the 5-minute chart of the FTSE, and as I said, we've had the Asian session has been pretty quiet there, as you can see, but then we come into the start of the European session, okay, into the London session, and bosh. You can see what happens there, can't you? You can actually see that price rallies up, and it rallies up very, very strongly. And then what does it actually do? Well, it actually prints a double top here, okay? And hopefully maybe you can see there if I draw that there. There we go. It prevents, that M pattern. It's a double top. That might be the opportunity for it before we can see what happens is price falls all the way back down in towards that range for the, for the rest of the European session before we start the US session. And, interestingly, just for those of you the sharpshooters amongst you, you might actually notice that this second leg of it, the sort of the second part of the M, was also an evening star formation as well. Okay, so you've got a combo there of big move up followed by a double top, which actually has the second leg as an evening star formation as well. So you know where your neckline is. Okay, once price breaks beneath that, that's where you enter your trade, and your stop loss should be above, if not the high of the second leg, above the recent most high. Okay, depending upon your own particular risk. Your own particular risk risk awareness and risk level. And on the flip side, okay, so this is the pound against the Japanese yen. This is the 1-minute chart here, and perhaps you can see that the price has actually been mostly kind of consolidating, breaks out here, comes back into it, but then actually price comes back down towards the yesterday's high, and I'm hoping you can see that we get a nice double bottom there. Okay, it's just that W before then price breaks its way up to the 200 period moving average. And what I can say it's a little bit like the last pattern, and the last pattern we say here is that, in the same way good trends leap off the chart at you, good patterns should leap off the chart at you. When you're looking for a double top or a double bottom, let the pattern come to you. Okay, don't try and project it onto, don't be seeing what you want to see so you can have a trade. Let it play out. Okay, let the pattern show you way. Okay, and when with a little bit of practice, you'll be able to see it very, very clearly. Okay, and you'll be able to recognize it very clearly, and that puts you in a position to be able to operate. Now, we know that the neckline is here. For, let's say, for new traders, we'll be looking to buy the break above that. More advanced traders would be recognizing here. Okay, when we're getting the sort of the hammer showing, they may be looking to get in there a little bit more aggressively, but that's above and beyond today's particular session today. I just want to show you simple day trading patterns, double tops, double bottoms. They are nice, simple patterns that repeat constantly across 1 minute, 5 minute, 15 minute, 30 minute, okay, charts. They are there. It's just for you to be able to sort of practice identifying them so that you can actually, start to trade them. And this, here we go, is this is the DAX, okay, and this is the 1 minute chart of the DAX, and what we have here is a head and shoulders pattern. We can see that price has actually just made a really strong run up there, and hopefully maybe you can already start to see it. We'll have our left shoulder here, our head, and our right shoulder there. So I'm just going to, here we go. As I say, I'm a better trader than I am an artist, so just bear with me. But hopefully you'll get the idea of, you can understand what we're seeing there. There you go. That's we've got the left shoulder, the head, the right shoulder, and you've got quite a clear neckline there as well, isn't it? Okay, and as I said, sometimes the right shoulder will be lower than the left shoulder. In this case, it's about the same. But what we have here, what's giving me the clearest of the right shoulder is that is also a bearish engulfing candle. That is also a key reversal candle. Okay, so once again, it's that little combo. It's like 2 or 3 things coming together at time and place that give you the opportunity to sort of basically to trade in. And you can see once price breaks that kind of neckline, you can see that actually it moved down quite strongly for the rest of that session. Okay, and as I said, this was the 1 minute chart. All of these patterns, they appear across all time frames and across all instruments. Okay, it's on you to practice. All right, practice to identifying. And this is the flip side, and this is the DAX and the 1 minute still. And this is an inverse head and shoulders. And what I've done is I've shown you a little bit of a scruffy one because that's trading. All right, that's trading. I'm not going to always put a picture perfect one, because actually, if you've traded, you'll realize that sometimes the price is scruffy. Sometimes the pattern isn't a beautiful textbook. Okay, it's about you having to trade what you see. But we can see that price has been in a downtrend, and it is doing a transition, isn't it? Doing a transition from a downtrend to an uptrend. And here we have again, we've got a left shoulder here, we've got a head here, and we've got a right shoulder there, with quite a clear neckline as well, quite a clear neckline. And that's what we can see. Price has descended, is putting into transition with an inverse head and shoulders. Okay, and then depending upon your aggressiveness, traders might be buying in here or somewhere in this particular range, depending, as I said, upon their aggressiveness. And you can see price moves its way nicely up towards the 200 period moving average, where it ends its run with a nice double top there before it runs away. Okay, so that's giving you, if depending upon your style of trading, okay, that's giving you, once that you're getting a double top, that pattern there, it's giving you an indication that run is over for the particular moment. Okay, and you're going to have to make a decision on whether to stay with your trade or whether to step aside from your trade based upon your trade plan, which I would hope would be in place before you pull the trigger. So, just a couple of final points. We'll have a few minutes just to quickly look at live charts. Is that, intraday trading, will have you entering dynamic and fast flowing markets. So it's imperative that you practice beforehand on a demo account until you're proficient. There are a myriad of tools and resources to help you in your endeavors. Be sure to download and check out the Admiral Markets or Admirals Supreme Edition download for both MT4 and MT5, which can help you enormously. And here's a couple of takeaway tasks for you. Okay, so pick, maybe you've got a favorite instrument, and challenge yourself to just identify whether it's trending or range bound for that upcoming intraday session. Look at what day trading patterns repeatedly occur for that specific instrument. Maybe you're a trader of the DAX, maybe you trade cable, maybe you trade cryptos, maybe you trade indices, maybe you trade gold. But just to have a look at it, see what patterns repeatedly occur. It's all about practicing and testing, and look at what kind of opportunities does it create for you, okay, on those shorter time frames. What patterns does it often create, and what kind of how do they play out? So in conclusion, not unsurprisingly, many traders enjoy intraday trading. However, it's always important to trade with an edge. Many traders like to use some simple day trading patterns as part of their trading edge. You can use candlestick formations as one form of pattern, and you can use price action chart patterns like double tops, double bottoms, head and shoulders, inverse head and shoulders as another type. Together, they provide plenty of opportunity for when you're looking to intraday trade. And what you can do is you can meld them into your own particular trading style. You might find, of those kind of 4 candlesticks we looked at, and the kind of let's say the 4 patterns we looked at, you might find that 1 or 2 of them really particularly suit you. Okay, and that's absolutely fine. And as I said, you can use these simple trading concepts discussed in previous sessions, okay, to help you. If you want to learn more about those, as I said, go and access the YouTube webinar archive. And as always, manage risk as always, ladies and gentlemen. That is always key. So we've got a couple of minutes. Let's take a little look at live markets just to finish us up. If you want more information, help and support, well, then you can join us on the exclusive Trading Spotlight community, okay? tradersyard.com/group312. I'll be there for the rest of the afternoon. If you've got questions about this session or other stuff, you'll find my colleagues Marcus and Jens are always posting fantastic stuff on there for you to able to access. And don't forget to join us next time. In fact, join me again, which is going to be next Wednesday, the 10th of March, 2 o'clock London time, where I'm actually going to talk about what could we learn from the GameStop endeavors, okay? So, many of you will be aware of what happened there. Many of you might not actually fully understand what happened there. And we're going to talk about how GameStop became a market mover, what were the repercussions for traders in the markets, and most importantly, right, what can traders learn from that trading event? So join me, 2 o'clock London time, Wednesday, 10th of March. Check your inbox for the webinar link or sign up on the Admiral Markets website. I hope you found that useful. I hope you found that interesting. I hope that's given you lots of food for thought to take away. As always, if you want to get in touch with us, you can do so. Okay, email at global@admiralmarkets.com. As I said, youtube.com/admiralmarkets, where you'll find this video and all the previous Trading Spotlight webinars, and also on facebook.com/admiralmarketsglobal. So as I said, if you'll bear with me a moment, we'll just switch across to the charts and we'll just have a quick look just for the last couple of minutes. So just bear with us and we'll just switch across to the charts. Boom. So here we go. What I'm looking at here is, hopefully you can still hear me. Hopefully you can still see me. What we're looking at here is just the, this is Admirals MetaTrader 4. This is my British pound profile. Let's have a little look at what I was looking at here. Okay, actually, this is the DAX. Well, listen, we can start with the DAX here. This is the 30-minute DAX here, and let's bring up the old drawing tool here. Hopefully you can see, here, this is a 30-minute chart. Hopefully that leaps off the page at the moment. Is, price came out of the Asian session and started up, and then actually it put in a double top there before it actually rolled over and fell away. And that can be kind of, as I said, quite simple, quite useful to look at. You just need to practice being able to see that. Okay, and as with all these things, practice makes perfect on that. Let's have a look at something else I was looking at this morning. Okay, gold. Here's gold 1 minute chart. Okay, so let me just manipulate this a bit so we can have a look. And as I said, just try to show you lots of different time frames and instruments for 1 minute charts, or from all sorts. And actually, what we had here is just yeah, super. So this is the 1 minute chart. This is after we had come out of the sort of overnight Asian session. Price was coming up to the highs, the Asian session, put in a little bit of rejection candle before it dropped away, came up, dropped away. And then here it came up again for a third time. So we've now got, not only a double top, but a triple top. And also that triple top is also a 1 minute evening star. Can you see how we've got a strong up candle, followed by a rejection candle, followed by a strong bearish candle, real evening star, and then basically price fell away, okay, for the start of the European session before we ran into a double bottom there. Hopefully you can see that, which kind of signaled that downtrend is over, okay, and price drifted its way up there. So hopefully you can sort of see that pretty quickly, pretty easily. Let's have a little look at what we've got. Just one more. Maybe we'll have a look at what have we got? What did we have this morning? Let's have a look at Euro Sterling. Okay, so Euro Sterling here. Okay, 15-minute chart. We can see that it started the session actually just by bouncing about back and forth, and then it made a great thrust up. It actually put in a shooting star here at the 200 period moving average, but actually it didn't follow through. Okay, remember what I was saying right at the start is wait till you get the break of the candle before, and it actually pulls up higher because it wants to go higher before it puts in not one but two. Okay, not one but two shooting stars there. A combination there just underneath yesterday's high. That we can actually see the price drifted its way all the way down there. So thanks very much for joining us here. I'm just we'll just basically, here we go. I'm hoping that you can just see me there. I hope that you found this useful. I hope this session has given you a little bit of insight. As I said, I appreciate we have a broad range of experience in the room. As always, I wish you the very best of success with your own trading, ladies and gentlemen. Thanks very much for joining us. If you've watched this on YouTube and you've liked it, give us a like, sign up. If you've got questions or ideas for future topics, put them in the chat box. We'll always be really happy to help listen to you and interact with you. And as I said, have a great weekend, and I look forward to you, those of you joining me next Wednesday, okay, which is the 10th of March, where we're going to look at what the lessons we can learn from GameStop. Thanks very much. Trade well, everybody, and I'll speak to you soon. Many thanks.